Okay, guys, welcome to another weekly market review session. Okay, let's get straight into it. Okay, so right now we are on my S&P 500, and guys, the month of September has officially started. So because it's already started for the month of September, let's take a look at the seasonality first, okay, to see how the month should play out. Okay, so guys, take note of this, okay? For the seasonality on the S&P 500, we can see, oops, daisy. Okay, we can see over here that the first week may be choppy, but then it eventually has a uptrend and spiked up, okay? And then it comes back and pull back down for itself towards the last week of the month. Okay, so be very careful about this. The markets are currently going back up. I'll show you the charts in a bit. Okay, they are going back up. This may be the rally that's pushing up our stock market, but okay, there may be a pullback based on the seasonality. Okay, so if we look at the S&P 500, you can see over here over the last week, okay, we had our markets going back up. You can see over here, down here, back up, and likely it's gonna continue for itself. We are at a critical point now. Okay, if I draw my horizontal line, you can see we are smack at this level, okay, of resistance, and you can see there's a bit of a gap as well. Okay, so typically when there's a gap, prices try to cover this gap. So if it does break above my 453 line, we can expect it to cover this gap and maybe go up to 456 and the previous high. Okay, so we're just literally about $5 to $6 away from the previous high with the recent rally back up. And this could be a possible new highs that the S&P 500 makes. Like I mentioned, don't be surprised if by the end of this year or start of next year, we hit $500 on the S&P 500. Okay, next thing, again, QQQ. If we take a look at it, right? If we take a look at the same movement as well, going back up, you can see there's a little bit of a gap here too. Okay, prices now holding at that resistance. There's a bit of a gap. Prices can possibly go up to 380 and then eventually go up to the previous high of 385 to 387. Okay, so that's how the markets are looking. Now, again, guys, when you're talking about your long-term investments, like buying stocks or even position trading, all of this buying should have been done when the market had its pullback around this area. Okay, this is for QQQ. For SPY, it's the same thing as well, guys. Okay, when the market pulled back, went below your 50 around this point, this is when you should have been loading up on your long-term stocks or investments, for loading up for your position trades. I know for myself, I loaded up on S&P 500 shares and QQQ shares. For those of you who have smaller portfolios, SPYG as well. Again, those who are familiar with options, I even did some sell puts on TQQQ, TQQQ. That paid off very well in a couple of days. Okay, so again, that's the time when the markets are pulling back, when you should be accumulating shares, not when the prices are going back up now. Okay, so please don't FOMO, don't fear of missing out, don't rush into the markets. Okay, the prices are literally only a couple of dollars from the previous high. The discounts were available. If you missed it, then wait for the next pullback and opportunity. Okay, don't rush into the markets when everything is at a high or coming up to new highs. Okay, always buy when it drops, when it's cheap. Dollar cost average on the way down. Even for position trading, those of you who are buying stocks for trading purpose for the next 6 months, 1 year, make sure the markets drop and then you average down and buy as it dips. Okay, then those of you who are doing options, accumulating shares like selling puts, you do it when the market pulls back. Okay, now That's how the markets are looking at. So just be careful for the month of September. All right. It's been rallying so far. It may rally a bit more. Then, according to seasonality, there's a pullback. So the markets may pull back towards the end of the month. Okay. Now, in terms of events for this week, we have Forex Factory. So Forex Factory, you can see mainly on Wednesday, PMI data. So for those of you who are day trading and doing your trading, take note of this. And then Thursday, 7 September, your unemployment claims. Okay. This is basically unemployment claims, number of people who are filing for unemployment insurance because they are unemployed. All right. Other than that, no heavy, uh, high impact events. I think this week is pretty chill. So trading should be a lot smoother. Next week, guys, please take note. CPI data is coming out. Inflation data, very important. Okay. This is going to be telling us how inflation is doing. Again, I think it has been coming down. Okay. But on the previous one, they were forecasting an increase. Okay, right, 3.3%. It actually did increase, but not to that level. So you can see previous inflation was 3%. This one went up by 0.2%. So inflation is still high, guys. It hasn't come down yet to the levels that we want. It hasn't tapered off. So just be careful. Okay, the announcement of this event is going to cause volatility in the markets. Okay, so with that, I don't have anything else for you. Stay safe, trade safe, and I will see you guys next week for another weekly market review session. Cheers, everybody.